Thanks, Tim. Great to be back on Share Cafe, and it's very good timing for us. We've got a lot of very exciting drilling results from recently to share with your subscribers. If we move to the first slide, I'll just give everyone a quick overview. For those who don't know Empire, listed on the ASX, as you mentioned, market cap around $130 million. We're in a quite strong financial position right now. We recently carried out a drilling and fracture stimulation program where we drilled the longest horizontal well ever in the Beetaloo Basin, the biggest frack job ever in Australian history. That program came in $5.9 million under budget, which was a great result. We currently have about 18 million bucks cash in the bank. We've got another $7.6 million coming in as a final reimbursement of some grant funding that we received from the Australian government and whose terms we have satisfied under the contracts. We've also got an undrawn credit facility with Macquarie Bank that isn't available at any time. So that leaves us in quite a strong position going into this year. And I certainly must say, in these current market conditions, we're very glad we won't have to be going near the markets to raise new capital in the very near term. We have a very strong shareholder base. If you look at the top 5 shareholders in our business here on the chart, these are highly sophisticated institutional investors in upstream oil and gas, and we really enjoy their support. If we now move on to the next slide, I'm going to talk to you a little bit about the Beetaloo Basin itself. So the Beetaloo Basin is demonstrably the largest gas resource in Australia. It's been described by Andrew Liveris, the former chairman of Dow Chemicals and originally from Darwin, as the 3rd largest shale gas deposit on Earth. This is a very low CO2 resource. In our tenements where we've been carrying out drilling and testing, the CO2 in situ is less than 1%, and we see that as a big competitive advantage going into an increasingly carbon-constrained world. And this is a basin that has connections both into Australia's east coast, where more gas supply is desperately needed, but also linkages into existing LNG projects. We definitely see the potential for this to become a LNG scale opportunity. And what the focus of the industry on is right now is we've moved out of the exploration phase. We know there's a very, very large amount of gas in place, and we're in the appraisal phase. So looking to move prospective resources to contingent resources and ultimately into reserves and production. We have a very large independently assessed resource base within our property set. We have around 43 trillion cubic feet of prospective resource. With a very limited amount of drilling, we've converted over 500 BCF of gas into the contingent or discovered resource category, and we expect an upgrade on that number quite soon as a result of drilling success. Moving on to the next slide, this gives you a bit of a sense of our acreage position within the basin. We have nearly 29 million acres of land in our tenement portfolio, and we own and operate 100% of all of those properties. This gives us significant flexibility as we think about how we look to move our assets forward. At some point in the future, it's likely that we would look to bring in a joint venture partner. There is significant interest in this basin by the major US shale gas operators, particularly as a result of the entrance of a highly accomplished US shale gas figure by the name of Brian Sheffield, who is one of Empire's largest shareholders. I've mentioned the prospective and contingent resource bases that we have, but what I would focus on is while this basin is quite remote, it is connected to existing pipeline and road infrastructure. Right now, that's got relatively limited capacity, but that will allow us to move into pilot production. And then ultimately, we're working with some major parties to look at much larger infrastructure development in future, and I'll touch on that shortly. If we move on to the next slide, I'm now going to give you a sense of some of the recent appraisal drilling and fracture stimulation and flow testing results that we've been achieving. So the geological map on the right-hand side is the prospective area within EP 187. That is our tenement that is immediately adjacent to properties owned by Santos. And I would argue we have been the most active operator in the Beetaloo in recent years. And it's looking like we may well be the first company to move into production from this basin. And we're focused on a pilot development project. We've had a very active few years here. This area that we're looking at, we've identified about 110,000 acres of highly prospective area. 110,000 acres is only 0.3% of our total acreage position. But if this asset was located in the Permian Basin or the Marcellus Shale of the US, 110,000 acres as a contiguous block would be considered a quite large piece of land, because there's sufficient capacity to drill a lot of wells. Netherland, Sewell & Associates, our independent resource assessors, have already booked a 4.3 TCF prospective resource across this area. Right now, we have 396 BCF of booked resource in a small area in between the Carpentaria 1 and 2 well pads. We did drill another vertical well, Carpentaria 4V, further out to the east late last year, which demonstrated that the shales were deeper, which is going to drive it in increased pressure and gas flow rates, but also the shales are a bit thicker, about 20% thicker. So we anticipate a very material increase in contingent resource in the coming weeks when we announce those results, as we have now significantly de-risked a much broader area. We've also carried out 2 seismic programs, and we've drilled, as I mentioned, the biggest wells in the basin to date. So in late 2021, we drilled our first horizontal well, Carpentaria 2H. That had a 1.25 kilometre horizontal section in the target B shale, and we carried out a 21-stage frack on that well. To our knowledge, that was the biggest frack in Australian history. We pumped about 6 million pounds of sand down into the job, and the sand is the proppant that holds open the fractures to allow the gas to flow into the wellbore. To put that into perspective, a typical coal seam methane frack job in Queensland only pumps about 50,000 pounds of sand. So these are big frack jobs. We then went out and drilled an even bigger well late last year, Carpentaria 3H. That had a 2.6 kilometre horizontal section, and we carried out a 40-stage frack. We're currently in the cleanup process on that well, and I'll step you through the flow rates results on these wells now, if we go to the next slide. So Carpentaria 2H, as I mentioned, our first horizontal well. The way that you generate commercial gas flows from shales is that you have to carry out fracture stimulation, and that's to create a porosity network of fractures. Then the water and sand you pump down. The idea is that you pump the sand in, and those sand grains hold open the fractures to allow the gas to escape. As per the US experience, where now shale gas comprises 70% of total US production, and the incredible economic benefits that have accrued as a result, there has been a process of optimization of wells over many, many years, and I'll show you a slide shortly around that. But what's really exciting to us about this result on Carpentaria 2H is that we've carried out 2 sets of flow testing. On our initial flow test result, we got about 2.2 million cubic feet a day over a 51-day test period. We shut it in for a few months to test what's called soaking, and essentially that's to allow remaining water in the wellbore and the fracture network to ease itself out into the formation, removing water blockages. We saw, as consistent with some of the US basins, that that's resulted in a quite material uptick in production. We've just announced earlier this week an 8-day test period on that well, and that's seen a big uptick. We're running at about 3.25 million cubic feet a day, and we really look forward to showing a 30-day IP rate to investors in the coming weeks as that data comes in. To put this result into perspective, what makes us so excited about this result is that there are a few very rough rules of thumb for shale gas in terms of flow rates and recoveries. If you get 3 million cubic feet a day per 1,000 metres of horizontal section, as we appear to be doing here, then ultimately in development, we will be drilling 3-kilometre horizontals. We've demonstrated that we can drill long horizontals with only our second well, and you tend to get a multiplicative effect. So 3 million a day on a 1-kilometre horizontal should be 9 million a day on a 3-kilometre horizontal. And again, there's another very, very rough rule of thumb that if you're getting 9 million cubic feet a day over 30 days, that could be about 9 BCF of gas. To put that number into perspective, if you assume a gas price of, say, $8 a gigajoule, which we think is pretty conservative in the current heavily constrained gas market, $8 a gigajoule times 9 BCF of gas, that's about a $72 million revenue stream over the life of the well. Obviously, there are some government and Indigenous royalties to take off that and a relatively small amount of operating expenditure. But given that we believe we can get the cost of these wells down to the $15 million range or so in development, we see this as a highly economic proposition potentially. And so this has really excited us and it's really driving us towards our pilot production project. If we turn to the next slide, I'm going to give you a quick overview of the Carpentaria 3 well. As I mentioned, the longest well drilled in the basin to date. A real credit to our operations guys at Engage Energy and our management and subsurface team, of whom I'm very proud of all their hard work recently. This well has proven that we can drill long horizontals consistent with the US experience. We carried out the largest frack in Australian history, nearly double the size of our last frack. And right now we are in the cleanup phase. So we've flowed it for 27 days. We're unloading the water that we've pumped down, and we expect, we're testing that well for soaking, and we expect to bring that well back on after the soaking period with increased flow rate. So again, further validation of the play there. If we move on to the next slide, I'm just going to quickly give you a sense of what is really exciting us about these results. On this slide, we can see a blue, green, and sort of a grey coloured lines. Those lines represent the productivity of horizontal shale wells drilled in some of the major US shale gas basins. As an example, the Appalachian region, the Marcellus and Utica, there was virtually no shale gas production in that area in around 2006-07. The technological shift that's occurred that allows shale to be so prolific is the advent of horizontal drilling and high volume fracture stimulation. It took thousands and thousands of wells in those basins to achieve what are now the optimized rates, where they're getting 20, 30 million cubic feet a day. And that's because there's a process of constant optimization of frac design, drilling design, and so on. What really excites us about our well is Carpentaria 2H, first horizontal well we've ever drilled. We're trialing lots of different scientific methodologies in that well. And yet the first ever well we've drilled, because we can bring US technological advances to Australia, we're already achieving rates that took a lot of wells to be drilled in the US to get to. We see ample opportunity for significant productivity uplifts over time, but we're starting from a really strong base. If we move to the next slide, I'm just going to very quickly touch on access to market. So we recognise as a small company in a capital intensive industry that getting into cash flow and production, even in a modest way under a pilot project, would be a really strong validation and de-risking of our project. And also it means that as we drill additional wells, we'll be able to convert them to production and reinvest the cash flow rather than issuing shares to investors or farming out. We are very focused on that pilot project, and we're working on a final investment decision this year, really driven by some of these recent flow testing results. We have an MOU with Power and Water Corporation, which is an NT government-owned entity that is both an aggregator of gas, but also they own the pipeline that traverses the basin. We're in discussions with them about building a pipeline connection into that pipeline to facilitate pilot sales, but also we're talking to them about potentially selling them gas. And we are also receiving strong interest from other parties about buying our gas, particularly given some very serious structural deficit issues facing the NT gas market at the moment. We've been very pleased with the level of support from the NT government for our activities. They've put some enabling legislation in place late last year, and we expect a final sign-off, hopefully in the not too distant future, around some recommendations of an inquiry that happened in years gone by, and that will facilitate the ability to move into pilot production. Our longer-term infrastructure plan, given the enormous scale of this basin, is to build much larger pipelines connecting the basin to both Australia's east coast and Darwin at scale. Darwin is already a major LNG export hub. There are 2 LNG export terminals there, one operated by INPEX of Japan and the other one operated by Australia's Santos. There are 6 LNG export terminals in Gladstone. We've been working with APA Group, who are Australia's largest infrastructure operator. They have a continuous network of pipes from Mount Isa connecting right across Australia's east coast. They also operate the Amadeus gas pipeline, and we're working on both a northern strategy and an eastern strategy to build significant pipeline infrastructure. So just finally on the last slide, we are very firmly on our path to pilot production. We've been doing what we say we're going to do, and we really look forward to moving into that pilot project. So the final slide's just a summary slide, but thank you very much. And Tim, happy to answer any questions.
Thanks, Alex. Quite a few questions come through. What role does the federal government and perhaps the Northern Territory government play in potentially funding some of these projects?
Well, good question. So the Northern Territory government has not funded any of our activities to date, and I don't think there's any such proposal on the table. The former federal government did provide some grant funding, which was designed to accelerate activity, accelerate the appraisal process, and accelerate the basin towards production. We and another company both received grant agreements under that program, and we've satisfied those obligations, but that program's come to an end. There are no proposals as such at the federal government level at the moment. And given where we're at in terms of now proving up this asset, it's our view that, we believe as an economic proposition that we can fund into pilot development, through the conventional means.
I mean, and that economic opportunity is supported by the fact you got Brian Sheffield on your register. He's a US shale gas billionaire, I suppose. What are the similarities he sees with what he's seen in the US with the Beetaloo Basin, and what does he bring to the table potentially?
Yeah, so I mean, it's been fantastic having Brian's support coming into the basin. He's made some quite material investments in the basin over a relatively short period of time. I don't want to speak to why Brian's making these investments, but I do think that he recognises that these are world-class shales. One of the major differences from a valuation perspective between the Beetaloo and the US space is that, we are all holding on to enormous acreage positions. Just talking of EP 187, for example, 110,000 acres. If you were to try and buy 110,000 acres in the Permian Basin in West Texas, where he had a highly successful business by the name of Parsley Energy, you could be paying $5,000 or $10,000 US an acre for that acreage, and sometimes tens of thousands of dollars an acre. So, I guess, one of the attractions is coming in on ground floor terms. What's been really beneficial about Brian coming in is that he's been very generous in terms of sharing a lot of his wisdom and contacts in the US. It's really piqued US interest in this basin, and we foresee that can bring significant new activity in over the years ahead.
And from an environmental perspective, is there any concerns around water usage up there?
Very good question. So there was a 2-year moratorium on fracture stimulation in the territory from 2016 to 2018. That was to address some quite appropriate and genuine community concerns around the risks of fracture stimulation. The government went through an incredibly extensive independent scientific process, inquiry. Justice Rachel Pepper from the New South Wales Land and Environment Court chaired that inquiry. Thousands of submissions were made, community concerns were listened to. And, in my engagement with local communities and traditional owners, which is a really strong direct engagement, the biggest concern is about protection of aquifers. We have some of the most stringent regulation for shale gas of anywhere in the world. And we follow that regulation very closely, obviously. The reality is that the protection of aquifers is very, very strong. We do need to draw water from these aquifers to carry out our stimulation jobs. And again, it's very highly regulated. So we're only allowed to take a tiny percentage of the expected recharge each year. And we've also already started recycling water, and that'll be a real focus of ours to minimise our environmental footprint.
And Alex, just finally, what can we expect to see in terms of potential de-risking events over the remainder of the year?
Yeah, so we've got a very busy year ahead of us, but it's not going to be a year that it was anywhere near as capital intensive as last year. Last year we invested around $50 or $60 million drilling 3 wells, carrying out seismic programs, sending the data and the core to world-leading experts in the US. This year is really a year that's principally focused on looking to reach a final investment decision on the pilot project. That involves a front-end engineering and design process that's ongoing. It involves negotiating gas sales agreements. And as I mentioned, there's significant interest in the asset. We've got a resource upgrade coming very soon. We're negotiating a pipeline access agreement. We'll be working on the regulatory approvals for the pilot project and looking to reach an FID this year. So we see a series of de-risking and value accretive activities occurring in the very near term and then throughout the course of this year.